Hello everyone and welcome to today's more important analysis videos on Thursday the 30th of August with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively quiet open in terms of the dollar move, although there is a slight air of dollar strength. It's beginning to take hold as the European session is sort of progressing. The big moves on the forex front are the Aussie dollar and the Kiwi dollar. Both negative, and that's come on the back of weaker than expected domestic data overnight for business confidence in New Zealand and also business investment in Australia, both missing expectations. But the key move came yesterday on sterling, whereby sterling had a big jump on the back of comments from Michel Barnier, the EU's chief negotiator, who said that they were ready to propose a partnership of the likes of which that has not existed before with any third country. So that is an interesting move that comes and suggests that there's a slight warming of relations between the EU and the UK in the negotiations, possible moves towards a softer Brexit and a deal, although it certainly doesn't look like a deal is imminent. It is potentially going that way, so that is certainly helped to unwind some of sterling weakness. Big bounce on sterling yesterday, back above 130, big figure on the dollar. Euro sterling back below 90 pence there as well. So it's real improvement in the outlook for sterling, and whether it's sustainable or not remains to be seen. However, at the moment we do have an improvement. In terms of how the dollar's moving, gold is interesting. That improvement in gold pulling gold back towards 1200 big figure again. I'll talk about the implications of that in my chart appraisals. Look at these as well, these equity markets which are under pressure. Certainly looked as though Wall Street was positive yesterday, but the futures have lagged a bit overnight. You had actually a pretty positive signs coming out of the NAFTA meeting. NAFTA renegotiations certainly seem as though that Canada could be close to becoming on board, but the markets have sort of certainly waned in terms of their confidence. You've seen the likes of the Turkish lira coming back under pressure as well. It could be an emerging markets thing, where the lira was weak yesterday, weak again today. You've got the Argentinian peso also under pressure, and I'll show you here the Chinese yuan, which is under pressure as well. So could be emerging markets thing as well there, which is coming under pressure for the equity markets. Now, today we've got a focus on inflation. We've got Eurozone inflation in terms of the German inflation numbers. You've got the Eurozone-wide inflation data tomorrow, but today we're looking at Germany. Germany inflation is expected, it gets released on a state basis throughout the morning, and then we get the countrywide data this afternoon at 1 o'clock. Expected to come in at 2% again on inflation there for Germany, and any sort of surprises could give an implication for Eurozone inflation tomorrow. Now, the core PCE is the preferred inflation gauge. That is at 130. That's expected to be plus 0.2% on the month. Always seems to be plus 0.2% on the month from the forecast, but the year-on-year forecast is expected to rise to 2%. That's back to target, and that would suggest a little bit more traction again in inflation. Now that would again play into the whole argument for tighter Fed monetary policy in the coming months. Now, my chart of the day is Euro Aussie. Now, as I said, the Aussie has been weakening, and decisively so, against the Aussie in the last week or so. Look at that strong run higher from 156 above 160, big figure. Continues to rise, burst through that resistance, 159 area. It hasn't really stopped, hasn't really looked back. It's got a strong momentum in an uptrend, strong momentum indicators on the RSI above 70. MACD lines accelerating above neutral, stochastics also very strong. And it looks like the market is now pulling, having completed that breakout of arguably, I suppose, a range play. You could suggest that a retest of 160, 140 is likely to be seen, and likely towards 160, 190 in due course, which is the March high. So corrections, near-term corrections continue to be bought into. 160 big figure is today's higher low. as the market has continued higher. But you can see here on the hourly chart, you've got a nice trend in place. That trend is supportive at 159.50 today. That is also a near-term breakout, which has become supportive yesterday. So again, that is a basis of support. Any unwinding moves on the hourly RSI towards 40, maybe 50, seem to be bought into. And yeah, I think this is a move that is likely to still continue, still run higher, and any weakness remains a chance to buy for a test of these March and April highs. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.